Tesla down 2.29%. This is Monday, the 9th of March 2026. The stock is trending once again as investors grapple with a mix of macroeconomic forces, regulatory catalysts, and supply chain concerns that could shape the company's near term outlook. At the center of the discussion is an impending report from the US National Highway Traffic Safety Administration which traders believe could play a pivotal role in determining how quickly the company can scale its long anticipated autonomous ride hailing ambitions. The report focuses on safety data related to Tesla's full self driving system and the viability of large scale autonomous operations. Investors are closely watching the findings because they could either accelerate or slow the company's push toward widespread robotaxi deployment. The company has framed autonomy as a core pillar of its future valuation, arguing that fleets of self driving vehicles could transform Tesla from primarily an automaker into a high margin mobility platform. If regulators signal confidence in the safety data, it could pave the way for broader commercialization of the planned Cybercab robotaxi service. On the other hand, a cautious or critical assessment could delay timelines and weigh on investor enthusiasm surrounding the company's AI narrative. Adding to the complexity is a renewed surge in global oil prices. Historically, rising fuel costs have strengthened the economic case for electric vehicles since drivers can reduce operating expenses by switching away from gasoline powered cars. Some Tesla bulls believe the current oil rally could revive EV demand and improve Tesla's sales momentum, especially in regions where fuel prices directly influence consumer purchasing decisions. However, the relationship between oil prices and EV demand is not entirely straightforward. While higher gasoline prices can make electric vehicles more attractive, broader energy inflation can also squeeze consumer budgets and weaken economic growth. In such environments, big ticket purchases like new vehicles, whether electric or gasoline, can be delayed. As a result, investors remain divided on whether the current oil spike ultimately benefits Tesla or simply adds another layer of macro uncertainty. Supply chain concerns are also resurfacing, particularly around semiconductor availability. According to reporting from Reuters, China's Commerce Ministry may consider export controls on chips produced by Chinese subsidiaries of the Dutch semiconductor company Nexperia. These components are widely used in automotive electronics, including power management systems, diodes, transistors, and basic integrated circuits that control various vehicle functions. Any disruption in the supply chain of these chips could create ripple effects across the automotive industry, potentially slowing production lines and increasing manufacturing costs. Meanwhile, skepticism around the company's autonomy timeline is growing among some prominent investors. Gary Black, managing partner at the Future Fund, recently pointed out that despite Elon Musk projecting that unsupervised autonomy could reach 25 to 50% of the US by the end of this year, 2026, the current rollout remains limited. Black noted that only about 8 vehicles out of roughly 400 operating Tesla robotaxis are currently running without safety monitors, suggesting that widespread deployment may still face technical and regulatory hurdles. All of these factors, regulatory scrutiny, macroeconomic shifts, supply chain risks, and ongoing debate over autonomy timelines, are converging at once, creating a volatile environment for Tesla's stock narrative. For bulls, the upcoming NHTSA findings could validate the company's technological lead and unlock the next phase of its AI driven mobility vision. For skeptics, the report represents a moment of truth that could reveal whether Tesla's robotaxi ambitions are closer to reality or still years away from large scale implementation. Stock is down 2.32%. This is Monday, the 9th of March, 2026. Not long ago, we were anticipating the stock to break $400. It did. It broke $400, and yeah, it broke $400 last week. But unfortunately, it has gotten a rejection. Yes, on Wednesday the 4th, it was at 406. I think a day before that, they were projecting that it would do that, and it did just that. Yeah, so the 10-day moving average is now a primary supply line. Okay, now okay. From time to time, it's actually the 10 and 21-day moving average, but of late it's the 10-day moving average supply line, meaning that if it closes within one standard deviation of that moving average, supply increases. So as things stand right now, the extrapolation is saying that yeah, lower prices will continue to print going all the way towards the 8th of February. But in the very short time, not that it matters, it might moderate. It will continue to decline, but not as much, not as heavy as it has been doing of late. Just some, but all in all, it's just still, it's better to continue to decline, but modestly. But ultimately, it will, tip over from possibly the 13th of March. So from now till early April, lower prices. But it could reverse. It could reverse. And we've also noticed that yeah, it does bounce. People are watching. People are watching. They always buy. They always buy the dips on Tesla. So keep your eye on the stock. So the further it declines, the greater the opportunity. Especially on a trading basis. So we have 331.34, 346.66, 371.45. They are all downward projections on this daily chart. Okay. Momentum on the 10-day moving average is expected to remain flat at least up till the 20th of March. Maybe may begin to decline from the 26th, and then may pick up from the 6th of February. Yeah, just validating what we have here. But yeah, well, to some extent, validating it. Yeah, but to some extent, validate. But all in all, it's just saying. Well, I think it's not really validating it. It's just saying that momentum. Yeah, it is actually validating it, but not tremendous. Not yeah, it is validating it, but not the. It's expected to decline modestly in the midst of that validation. Yeah, let's see now what we have. On its 21-day moving average. Let's see whether we have an alignment. Let's see whether the 21-day moving average would equally be indicating the same thing that the 10-day moving average is indicating. Yes, pretty much they are all in line. So I can I did for now. Also, the stock is also consolidating as well, even though it's been declining since the 2020. 3rd of December, but it's still consolidating in the midst of all of that. Structurally, technically, it's still consolidating, even though it's just been declining. In the medium term, it is declining, yes, but in the longer term, it's not. It's still consolidating. Let's see what we have. Let's have a look at the 40 and the 21-day moving average. 40 and the 200-day moving averages. Let's see on this daily chart. Okay, 40-day moving average equally just like the other. So they're all aligning. They're all aligning. So there's a chance that lower prices may continue to print at least up till early April. They're all aligning. Yes. Yeah. Let's have a look at its weekly chart. Okay, lower prices up till the yes, we have an alignment. Yes, up till the 30th of up to the 6th of April. So we have an alignment. So there's a chance that this is what may continue to happen. Yeah. But projections are, as ever, very ambitious on the weekly charts 536.24, 594.86, 631.08. Okay. See what you make of Tesla stock. And thank you very much for watching this video.